there are a lot of interesting theories out there. Ronan Manley has done some great work on this, about whether all the actual good delivery bars were shipped out in the late 60s, supporting the London gold pool.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Man, we're right at the end of February. It looks like everything's hitting the fan. Is there gold in Fort Knox? I want to know, and I want to know it now. Hey, what about Doge? Is Doge going to just sink the economy? Because we're a credit-driven economy. Once the dollars stop flowing, so does all economic activity, at least up to now. Maybe things are different. Maybe they're not. Craig Hemke is with us now, tfmetalsreport.com. Make sure you go to that site and sign up. And any questions or comments, KLF@kerrylutz.com. Craig, we got like so much to talk about here. First thing I want to talk to you about is Fort Knox, man. Like, I know the gold is there because I saw the movie Goldfinger, and it might all be radioactive, but it's definitely there, right?
I'm sure there's gold there. There are a lot of interesting theories out there. Ronan Manley has done some great work on this, about whether all the actual good delivery bars were shipped out in the late 60s, supporting the London gold pool. I don't know, maybe. Even when the last time they had cameras in there and did a tour was right after Nixon closed the gold window. In 1974, they went in with a select group of politicians and some media. They said, "Oh, look at here. Here's one of the rooms we keep it in." And you could see at the time there were bricks, not the standard, whatever those things are called, the trapezoidal looking London good delivery bar, just square up rectangle bar bricks. And the problem with those is that a lot of that gold in Fort Knox got there via the confiscation or the buyback or whatever you want to call it of 1933, where holders of gold sold their gold,
Expropriation, I would call it.
Their gold to the government at $20.67. And then the government, there you go. They certainly didn't hypothecate it. But anyway, the government bought it for $20.67, then turned around and revalued it at $35. So anybody that held the gold didn't participate in that. But anyway, so you take all the gold coins, which gold coins are rarely 4.9, certainly from back then. And they melt them all down, and then they poured them into these bricks that you see in the archival footage of Fort Knox, and I'm sure that most are still there. Well, the problem with that is they're about 90% gold, where the global standard these days is 99.99% gold.
Yes.
So even if you were to go in there, drill some holes, weigh them all, and you came up with 4,533 metric tons, most of it is that 90% gold. So if you had to re-assay it, remelt it, and re-refine it, you'd probably have closer to about 4,100 metric tons. So right there, you're overstated by 400 metric tons. Anyway, the point of all this is I don't know if it'll go anywhere. It kind of reached the point of media mass attention a couple of days ago. They go there, Musk goes in there, or a couple of senators or even Trump, and he just goes in there and waves his arm around with his phone and says, "See, look at all this shiny gold. What does that accomplish?" So
what would happen if it wasn't there, though, if it was empty, if the vault was empty?
Well, if it wasn't there, they wouldn't go there at all. They'd come up with some reason to not. Yeah. It's the vault door is under repair, so it doesn't fit into the schedule right now. They'd come up with some rationale to not. They're never gonna walk in there, crack open some door, and there's just like cobwebs and shit hanging from the ceiling.
Yeah, they would have to get Geraldo to do that because he's an
exactly
opening empty vaults, right?
Exactly. The bigger story, Kerry, is if you try to connect, again, I may be completely chewing on a nothing burger. Me and every other analyst in the gold space. We may be connecting dots. My standard joke is I might be pulling a John Nash. Remember that
Yeah.
from the Beautiful Mind movie? Where in the end, after years of just being schizophrenic and crazy, he's got all that stuff on his wall and he's got all these strings and all. Maybe that's what I'm doing when I try to connect all the dots of everything that's taken place in the gold market since early December, shortly after Trump was elected. But this talk of auditing or trying to figure out how much gold the U.S. actually has is certainly a dot that you can possibly connect to some other things to try to figure out what's going on. We'll just see. We'll know soon enough, I guess.
Yeah. Yeah, the gold has to be there. I'm about to write an article about that because the alternative, if it was exposed, that would be a global meltdown, right? I mean, instantly, all the fiat currencies of the world would probably go back to their intrinsic value, right?
Yeah, well, it's one of those things that even like if they were to revalue gold on the books, which there's a lot of talk about that because the U.S. carries it at $42.22. We don't know what the impact would be. If you walked in one day and there's no gold, maybe it'd be some volatility for a day and then everything just sail off into the distance, unaffected. If all of a sudden they come out and say, well, we've got X amount of gold and we want that to represent 25% of our debts. So we're going to now say that gold is worth $30,000 an ounce. Does that mean that gold trades at $30,000 an ounce? Not necessarily. I mean, it's just a book entry on the Treasury Department's balance sheet. So it depends on, a number of other factors to see how that would all play out. If they walked in there with any gold, I don't know what would happen. What I do know, Kerry, is that at the end of World War II, the U.S. had, let's just call it 25,000 metric tons of gold. They backed the dollar with it to give the dollar, people using the dollar, some confidence to rebuild the world. You can convert $35 into an ounce of gold. Well, by the time we got to the late 50s, the world was, beginning to, it had gotten to start again economically. And a lot of countries had dollar reserves that they said, well, we really don't want these. We're going to have gold. And the U.S. lost about 7 or 8,000 of those metric tons. And it was a big, it was a scandal on what, and they had hearings in 1957 and 58. What are we going to do about this? Well, what they did is by 1961, they said, we're not going to go this alone anymore. So the U.S. pledged about another 7 or 8,000 metric tons, along with about 7 or 8 other countries. And that was the London Gold Pool defending $35. And all of a sudden that was gone. So now all of a sudden we got 8,133 metric tons left. And Nixon said, that's enough of that. We're not converting dollars anymore, and that's allegedly what we have left. Allegedly.
Mm-hmm. Interesting. Well, something's going to happen here, right?
Seems like it, Kerry. The standard line is that Trump's going to, put all these tariffs on, and gold's not going to be able to leave London or come into the U.S. from Canada or Mexico or anything else without a big tariff. So we got to shore up the COMEX with a bunch of physical gold, kind of like what they said, we couldn't fly gold around during COVID because there weren't any pilots and nobody was flying. And so we had to shore it up then. So the standard line is that's what's been going on since early part of December, about a month after Trump was elected.
Interesting.
Okay? But if we were to try to connect dots, we could say, well, they're trying to onshore they're trying to get as much gold back here as fast as they can. Oh, and then they're talking about Fort Knox because they need to know exactly how much there is. And then once they know how much there is, there's this lady. Have you ever talked to Judy Shelton? Have you ever interviewed her or tried to interview her? Kerry, you know who that is?
I know the name, haven't had her on.
Judy Shelton was actually nominated to the board of governors of the Federal Reserve in about 2018 when Trump had a chance to replace it, to nominate a couple of people. And it was shot down. She was shot down because she's just a lunatic gold bug, conspiracy theorist, fringe, tinfoil hat person. Anyway, so Trump knows Judy, obviously. And Judy's whole thing has been, we need to shift debt and remonetize gold by issuing gold-backed or gold-indexed 50-year debt. Okay. Interesting idea. Who would buy, Kerry, how much... If you were just a buyer, if they were suddenly start issuing, they got 20-year bonds, 10-year, notes, 30-year long bond. What kind of, if you just were going to buy one, Kerry, a 50-year bond, straight up the way they're done now, what level of interest would you demand?
Me, I can't even imagine, I'd want like 10-12%, I would think, right?
You would think, right? Because the way the U.S. fiscal situation is and the destruction of your purchasing power over time, if you just simply get your principal back. So what if, though, Kerry, the U.S. said, okay, we're going to issue these bonds, but they're going to be either redeemable at the end, 50 years from now, let somebody else deal with it, or we'll just index them to gold. Your principal is indexed to the price of gold for 50 years from now. So if you knew your principal was protected or hedged or whatever you want to put it to inflation and the price of gold and everything else, then what level of interest would you take? Would you take 3 or 4, 5?
Yeah, maybe. I mean, I don't trust the government, so it's hard to know.
Well, there are enough suckers out there around the world that probably would. So anyway, my point is, that's what Judy Shelton's always talked about. So, okay, well, let's point one more dot in here, Kerry. Remember Trump about a month ago said he wanted to create a U.S. sovereign wealth fund? Remember that?
Right. Yeah. I didn't quite understand.
How you gonna fund that thing? Now, you got to put some cash in there. Where's it going to come from? You can't just create. I mean, we're already going to do a $2 trillion deficit this year. We're going to sell another $2 trillion worth of bonds to fund that thing with $2 trillion bucks. Then you got a $4 trillion deficit. It just makes selling trade. So what if, in the grand scheme of things, John Nash now phoning in from wherever John Nash is these days, somewhere in heaven, I guess.
Yeah.
What if the plan all along has been, we're going to set up the sovereign wealth fund. We need to fund it somehow. Judy Shelton says we can fund it with some gold-backed bonds, but then we got to get the gold back here. We got to know how much we've got. And then we got to revalue it because at $42 an ounce, that's only about $700 billion at today's market prices. But what if we carried it on the books at $10,000 an ounce? Instead, that'd give us $2.5 trillion that we could. See what I'm saying? I don't know if any of that makes sense. I have no idea if that's where they're going, but that's one plausible scenario. And then I should further add, again, what we don't know, because this has not occurred any time in our lifetime. If the U.S. government, we don't know if the government, if they say it's $10,000 an ounce on their books, does that make it trade at $10,000 an ounce? I doubt it. Unless the government says we are a buyer at $10,000 an ounce, then maybe. Otherwise, it might just be an accounting gimmick. I don't know. All this stuff is something that has occupied my mind through the cold winter months, and we'll see where we go from here.
This is fascinating, man. This is fascinating. Well, so what about what's happening with Doge? Does that give anyone any realistic hope that this ship can be righted?
I guess it gives some. I mean, that was all part of the rationale for a 10% drop in the gold price right after Trump got elected. Remember, it peaked out in late October, and then by the time we got to that Fed meeting in December, it bottomed out about 10% lower. And it was all because, Trump's going to cut spending, and he's going to be pro-growth and higher interest rates and all this kind of stuff. That was at least the rationale that was behind why gold was going down. Well, I thought at the time, man, I mean, I guess what we found is that they can try to expose things, and they can say we're not going to have a USAID anymore and all that kind of stuff. But the government is still run by appropriations bills and omnibus spending bills and all that kind of. There was something that just used through the House yesterday that Thomas Massey came out and said that's going to increase the debt by $350 billion.
Mm-hmm.
So I don't know. It sounds good, looks good. It's good politically. But whether or not it really does anything, and then, to actually net trim the deficit, we're already about 4% of the pace from the last fiscal year with 4 months in, which puts us on a pace for about $1.9 to $2 trillion in deficit this year.
Mm-hmm.
So, is Doge going to have any impact? I don't know, Kerry. I wish it did, but I've never been optimistic that it would, and I'm still not.
So it's just a PR deal. Is that it?
Yeah, I think so. I think Trump is building political capital with people. Besides putting Doge out there and running these headlines and people, seeing the waste and definitely exposing the corruption, right? Look at all the, how these politicians all got became millionaires is by serving on the board of, some random foundation that gets $50 million a year from the government. So that's good political points. All the other executive orders that he signed that, immediately there are 10 or 20 that have like an 80% approval rate that he just puts out, even like getting rid of plastic straws, whatever, or paper straws. Okay. Yeah. Or bringing back the incandescent light bulb, that kind of stuff. That's all stuff that, again, has a massive approval rating. And then he did it. And again, makes headlines, make people think, yeah, this guy's really doing the stuff I like, to give him some political capital, for the tough stuff.
PR.
Yeah.
Just a big PR show. Is that it?
Yeah. So, yeah. Oh, for sure. Yeah. And again, it's just building up some political capital for what's going to be some really tough decisions ahead, and he's going to have to navigate himself through. But this idea of the sovereign wealth fund, or whatever reason you might revalue the gold on the balance sheet, we'll see if they do. And again, I have no idea because you can't say, well, the last time they did this, Kerry, they took it from 42 up to 2,000. Gold immediately went to 2,000. Well, they didn't. This would be the first time in our lifetimes they've ever done this. So I don't know what the impact would be.
Interesting, man. Yeah, this is a fascinating conundrum, that's for sure. And you just got to wonder where it's going to end. So we heading for a disaster this year, you think? Is that what you're thinking?
Well, Kerry, you may recall when the last time we spoke was right after I published my forecast for this year. Mm-hmm. And, that thing I do every year, and I put it out in January. And this year was called Inversion Reversion. And the theme behind that was that the inverted yield curve, where short rates are higher yielding than, like the 2-year note is a higher yield than the 10-year note. It shouldn't be that way. But that inverted yield curve means that, you're signaling that a recession is coming. History is taught from the last 6 or 7 times that's happened, the recession actually begins once the yield curve flips back to a positive slope, once the 10-year note, once again, is a higher yield than the 2-year note. Well, that happened in about September of last year. So I thought, well, okay. Well, now look even the last couple of weeks, look at how, this idea of an economic slowdown is catching on. The Secretary of Treasury was talking about it yesterday. You cut any government spending, that's going to impact and that nominal GDP growth as well. Labor market's going to start to kind of slow down. I don't know. We shall see. Even rate cut odds, which just as of a couple of weeks ago, Kerry, you had to go all the way out to September before you found at least a 50-50 chance of a rate cut. Now, all of a sudden, it's about 2 chances in 3 you get one by June. So there's a recognition going on here that we're tipping over. And that's not unusual. A lot of times that happens in the first year of a presidential cycle. So here we are.
All right. So what do you do here? Is gold going to keep going higher here? They don't seem to want it to go over 3,000, do they?
Yes, it has been. There seems to be a line in the sand drawn just below that price, around 29.60 or 70 on the futures. When it gets above there, well, you know what will happen when it gets to 3,000, Kerry? There'll be all kinds of headlines, all kinds of news. What is this? Oh, it's 3,000. It'll move a little bit past 3,000 and then go right back down under. And then people will say, that's it. It ran into resistance. Remember, 2,000 was like that back in 2020. So it'll get there at some point. My forecast this year, I said it'd probably get all the way to 3,100 before settling a little bit lower. We've gotten a head start on that. The key to it all, really, besides all this other stuff that we've been talking about, and the gold moving from London and Switzerland into the U.S., the key is continued and persistent global central bank demand. Ever since the U.S. slapped all those sanctions on Russia in about this time of the year in 2022, 3 years ago, kicked them out of SWIFT, froze their foreign currency reserves. Ever since then, the global central bank demand for gold has soared. 2022 was a record, going all the way back to 1968. 23 and 24, all 3 of those years greater than 1,000 metric tons of net demand. sure looks like it's not stopping this year. I think that is something that underpins price. It keeps that physical demand, prohibits deep corrections in the paper price. And so, yeah, it's not straight up. We've been up every week so far this year. Every week this year, Kerry, has been a green candle on the weekly chart. Yeah. There are not going to be 52 of those babies. So it'll continue to move up in stages, it always does. But I sure wouldn't get freaked out and scared off just because suddenly the price starts with a 3. One day it'll start with a 4, too.
So what about Bitcoin? It's not been doing too good here.
Now, isn't that funny, Kerry? I mean, well, there are a number of reasons for it. I still think, look, I was saying this at 18,000. I sold one of my basically 3 Bitcoin at 18,000 because that was when they instituted Bitcoin futures in 2017 or 18. And I was like, well, that's it for that, man. Now the banks got their claws into it. Mm-hmm. Well, okay. Well, we know what's happened since. It's gone up 5 times. But I do think that now that there's kind of synthetic Bitcoin with all this futures and, and all this other jazz. What's funny, Kerry, is it seemed like it was such a layup.
Yeah, didn't it?
We say this about gold. If you're trading gold and anytime it looks great, oh man, everything's in our favor. You've got to be prepared to sell some because everybody's on the same side of the boat. And it's almost universally true. And you go back to after Trump got elected and we got into December and there's ETFs and Trump's going to start a national Bitcoin reserve and there's all blah, 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 blah. Oh my God, this is the easiest trade you're ever going to see.
Yeah, right.
Oh, and then it goes down. Yeah.
We know how that works out, right?
Yeah. It's just almost universally true. Everybody gets on one side of the boat. Everybody's bought. Everybody's bullish. The opposite happens. That's what's called being a contrarian. So, now that it's broken down through that 90,000 level, we'll probably bang up, try to get back above there. It might pull back even further. Mm-hmm. But fundamentals are still fundamentals. It's an interesting way to put it. But anyway, the supply-demand fundamentals of physical Bitcoin are still compelling and always will be. So maybe in another period of pullback and sideways for a while, but we'll probably go. Can't imagine, the general thesis has changed.
So in other words, the situation is hopeless but never serious.
That's one way to put it. Well, the opposite is true too. Like I said, when everybody's all excited and everything looks like, wow, I mean, we are in great shape here. You got to be prepared to sell some of just about anything. The opposite of that is also true. When everybody's full of despair, this is going to zero. Yeah.
Hey, but Buffett, is sitting on more cash than he's ever sat on before. What does Warren Buffett know that the rest of you out there don't?
That's a good question. That's a good question. You could certainly, let me preface this. I have predicted 10 of the last 1 market pullbacks. So
I got you 20. Great.
Yeah, you might be up to 20. So there have been reasons to question the valuations of the stock market for quite a while here. Though I will say, the market is subject to liquidity concerns. Now, money supply is growing again. That's interesting. But that reverse repo account has been wiped out. Remember, it was like $2.5 trillion. It's now like 60 billion.
Yeah.
And the Fed is still tapering and all that kind of stuff. There may be like a little mini liquidity crisis that brews that could, cause the stock market to pull back 10 or 15% or something like that. And at that point, again, everybody would be like, oh, God, here it comes. The S&P is going to fall 50%.
Hey.
And then,
I will just go back. I've been doing this 14 years now. You got me beat by a few years.
A year or two.
But I started interviewing Martin Armstrong, and the Dow was just under 12,000. And he said it's going up to 35, 42, 45. All right. And then in 18, he said it would hit 45 somewhere between 22 and 24. Right. It's just the Dow. I mean, it's not really a representative basket of the market, but it's still a noteworthy index. He's been right all along. He's saying 65,000 by 32.
Okay. Hey, sure. Why not? If the Fed senses a liquidity issue, and they need to start pumping the cash, and they stop taper, and they start QE again, and all of a sudden interest rates get out of control, and then they go into yield curve control, and they're just, I mean, you can make all kinds of reasons as to why you could get a 50% out of the stock market. Sure. Why not? But hey, you know what? What nobody ever talks about, you go back, again, anybody can cherry pick dates.
Yeah.
But the total, the total gain in gold since the year 2000 or 2001 or whatever is above the S&P. So I think a blended, balanced portfolio is always a way to go. And you work some gold into your portfolio is probably a good idea.
Hey, remember Will Rogers said, invest in inflation. It's the only thing going up. Right? And that was
it's Oklahoman. Yes, for sure.
In the 20s, that was. So even then, I do think inflation's inevitable. It should be death, taxes, and inflation.
Yeah.
Right?
Yeah. Right. Well, and I've thought since about June of 2020, I think was when I first started talking about stagflation being the ultimate outcome of all this. 70s level stagflation, where again, inflation, but very little growth in the economy. And as we get deeper into this year, that term that, you see those charts sometimes of Google searches, like in Washington, D.C., people searching for how do you bleach bit and all that kind of stuff a couple of weeks ago.
Countries without extradition treaties,
right, exactly.
wiring money, and
right. People searching stagflation is going to grow as we go through the year too. And again, the parallels to the 70s will be negative real interest rates, where the Fed will be forced to do yield curve control and be doing QE and say, we're buying all treasuries above 4%. But inflation is going to be at 5 or 6 or 7 or something like that because they have to. And just like the 70s, it's going to be a very beneficial time for all commodities, not just gold and silver.
Agreed. No question about it. And, it's definitely exciting times here. And, when we have this discussion again in a few months, it's going to be totally different. That I know. It's it's a brave new world out there. Hey, so you got to go over to tfmetalsreport.com and sign up. I think you're lagging the price of a latte here, Craig. I think the price at the Inflation Cafe is going up faster than your subscription fees.
I'm at a loss. I had something I compared it to a couple of weeks ago, and I thought, well, that was pretty good. I should remember that. Now I can't remember what it was because I'm now pushing 60 hard. But yeah, I think for all, I know what it was. I got my bill. I'm looking through my Visa bill, and all of a sudden, 2 cars for XM radio is $50 a month, $25 a month just to drive around and listen to the YouTube channel and college sports. And I'm like, what the hell? I'm only charging $15. Yeah. I think that's a better bargain than satellite radio. So, yeah, I think it's worth it. I don't know if anybody else does, but I think it's worth it. So please check us out. Like I said, tfmetalsreport.com.
Yeah. All right. Excellent. Hey, got a question for Craig, myself, kl@kerrylutz.com. Send the email. We'll get you an answer quick. And we have a link to Craig's site, tfmetalsreport.com, in the show notes to this interview. On financialsurvivalnetwork.com. When you go there, just sign up for your free newsletter. Over 70,000, I think 75,000 of you have so far. The numbers have just been escalating like crazy lately. For some reason, maybe that's a indicator in itself. Craig, we will talk to you again real soon, man.
Always fun to talk, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.